Insurance premiums spike by 50% on average after just one accident, but you can avoid this costly trap. Most drivers think accidents automatically mean higher rates, but insurance companies don't actually look at accidents themselves. They care about claims. Here's the insider strategy. For minor accidents, get repair estimates before filing a claim. If repairs cost less than your deductible plus 2 to 3 years of increased premiums, pay out of pocket. Let's break down the math. A $1,000 fender bender with a $500 deductible means you'd get $500 from insurance. But if your premium goes up $600 per year for 3 years, that's $1,800 in increases. Paying the $1,000 repair yourself actually saves you $800. The secret most agents won't tell you: insurance companies can't raise your rates for accidents you don't claim. They'll never know about that parking lot scrape if you handle it privately. Exception: always file a claim if anyone else is involved. Skipping the claim could leave you liable for their injuries or damage. Remember this golden rule: insurance is for major accidents that could financially ruin you, not small repairs. Being strategic about claims keeps your rates low and your coverage intact when you really need it. Bet your agent never explained that part of the game. Now you know exactly when to file and when to pay.